Hello, today we're going to step you through financial consolidation with Jedox. This demonstration will take you through entering, modifying and deleting elimination entries for two entities within a consolidated group. Entries in this example will include intercompany transactions as well as equity eliminations. And finally, we will be reviewing the consolidation points in the group accounts. First step is to review our consolidated financial balance sheet for our group. Our particular group has two distinct entities. We have Star Corporation and Planet Corporation. Star Corp, being the parent, owns 80% of Planet Corporation, and importantly, it has held its investments since incorporation. You can see here we have a third entity called the Elim entity. This is the particular entity where we're going to be entering our entries to do the elimination for the top level. So we have a consolidation of our two corporations that consolidate up to all entities, and then we'll have an all entities consolidation which will consolidate the elimination entity as well. So the first step is to look at the entries we need to make to eliminate the intercompany transactions. So here we have a journal template set up in Jedox, which enables us to eliminate the intergroup transactions. So I can select my month and my year I would like to do this for. The next thing I'll be doing is selecting the accounts I would like to eliminate. So in this case, what we'd like to do is to eliminate the debtors and creditors position between the two entities. So the first thing is that I select my creditors control account, the cost center I would like to eliminate. I can enter a description and the amount that I would like to eliminate between the entities. The second part of my transaction is the other side, of course, eliminating from debtors control against that same cost center the same amount. We can see here that our totals are in green, which means it balances. If I had an unbalanced transaction, I would see a variance down the bottom and my numbers would turn red. Always important that we have balanced transactions. Once I'm happy with my transactions that I'd like to eliminate, I can then process this journal into my balance sheet, into my elimination entity. So I can click on my process button here. This runs a Jedox process to take this entry and put it back into the balance sheet. If I now come back to my balance sheet, we can see in my elimination entity, I have some entries now. If I scroll down to my debtors control, we can see here that the total of all entities was 608,427. We have eliminated 8,427 in the elimination entity, which means the total group now is down to 600,000. So it means I've eliminated those intercompany transactions from my debtor control. I scroll down to the other side, which is my creditors account, and we can see the same action has happened here. I've entered 8,427 into the elimination entity, and it's been eliminated out of my total at a group level. What I can also do with Jedox is review the commentary around my elimination entries that I entered in my journal. So we've got a nice audit trail of exactly the entries we've made into the system to eliminate the intercompany transactions. Step 2 in preparing my financial consolidation and eliminations is looking at our equity elimination, which is a little bit more difficult than just doing our intra-group transactions. So in this particular entry, what we need to do here is eliminate the equity position of the ownership between the entities within the group. So at a total group level, it is completely eliminated. So step 1 is that we're looking to eliminate the investment in Planet Corp from the balance sheet. We have a $250,000 asset inside Star Corp's balance sheet that we'd like to eliminate. That's the first step. Step 2 is eliminating the share equity, the share capital on Planet Corp's balance sheet in full. Step 3 is that we need to eliminate 20% of the non-controlling interest on Planet Corp's post-acquisition retained earnings. So as I said at the start, Star Corp has owned Planet Corp since incorporation. So we don't have to worry about the post-acquisition apportionment of the retained earnings. All we need to do is eliminate 20% of the total retained earnings from the balance sheet. So this is the step here. The next step is to recognise the non-controlling interest as at the 30th of June, which is the reporting date of the 1.9 million. Finally, we need to recognise the goodwill as part of this transaction of the business combination. And typically goodwill, from an accounting sense, when we're doing eliminations, is the balancing item between all the other items above. So once we've got the entries in, our transaction is now balanced. We've got green lights and we've got zero variation. We can now go about processing this into the balance sheet. The process is now complete. When I come back to the actual balance sheet, we can see we've got new entries recorded here. So as I scroll down, we can see here the first thing is that we've recorded goodwill in the all entities eliminated consolidation of the $751,000. The next step was to eliminate the investment in Planet Corp. We can see now it's zero at a total level for this elimination entry. The accumulated funds, we've removed the 20% non-controlling interest from the post-acquisition retained earnings. And finally, we've eliminated the 83,000 share capital from Planet Corp's balance sheet via the elimination entity, and also recognise the non-controlling interest as at the 30th of June as that reporting date. So now we've completed our financial elimination entries, and Jedox by default consolidates the values. We've got the correct amount for our net assets and our net equity at our total balance sheet level. So that is an overview of financial consolidation with Jedox. Thank you.